don't know if it's Italy, you don't know if it's the UK, you don't know if Argentina's spreads. We're not in crisis. We're relatively stronger, but rates are likely.
And Argentina, you're starting at 1.6.
It's working. I think it's working.
That's all I'm saying.
What's going on, guys? Again, not really doing a whole big promo here, sharing it across, the board. I was just trying to, again, get this thing up and running again, so I can, have some kind of, a,
over the course of the last couple of weeks,
visual aspect into, again, these moments in the market where you want to see it and hear it from different perspectives, so to speak. And so, where I may not be on here long for this conversation, more or less, but I did wanted to bring a little light, to the day a little bit, if I can, very briefly here. And then I have more errands to run. As you guys can tell, I've been very busy. Hence, I've been, again, ghost in a lot of ways out of the Discord rooms, the Facebook Messenger group, and many of them, other media platforms that I kind of frequent on often a little bit. Again, Stock Twist, I'm on there out every, because I can use it from a mobile phone more or less. But outside of that, I haven't been able to, stream, properly and consistently like I would have liked thus far. But things are again shaping up a little bit here and there. Just was able to get the, another streaming platform up and running in StreamYard, as you guys can see here. Again, since they shut down Google Hangouts, it's like brighter than that. Let me see if it's better. I'm in my office, obviously. But anyway, so yeah, what's going on, guys? Again, peace, power, profit. I know a few guys might have popped in here and there. What's going on, family? Universal Warrior. Anybody else that may be watching and busy a little bit. Again, I didn't do a big promo and kind of, broadcast this video out or the link out so people can know I'm on. I probably do it on maybe the Facebook, whatever. But again, just kind of, getting through this day, this Friday, watching the market, kind of rally here. I'm pretty sure you guys witnessed it yourself. It's one of those rip your face off kind of moves to the upside, not necessarily warranted for any kind of necessary data or news to cause it, more or less. And they're just trying to look for anything to kind of rally the market because they got punched in the mouth this week in the market. In terms of the Dow dropped well over 700 something points that they were trying to claw back. So today they were able to claw back at least 200-300 points of it through this manufactured pump or manufactured market rally, which we're getting today, because again, there's no true data out there. They want to say the bond market's kind of rebounded a little bit. Okay, granted, the bond market barely rebounded a little bit today, but it was showing signs of that yesterday, and still, what did the market do? So again, they're looking for anything they can to, provide an excuse to kind of rally the market. Now, again, it's good for those who are on the right side of the trade. That's all that matters at the end of the day. Are you on the right side of the trade? Granted, we're here to make money, not necessarily, make the market bend to our will. So let's get that out the gate, out the gate. But however, you still need to be conscious of that, because what happens is you'll become complacent to the idea that, okay, now we're thinking we're going to rebound again. And you'll start kind of applying pressure to the upside. If you got some kind of position out there you may want to get in. And that may be a bait and switch kind of reality, or a fool's gold pump, so to speak, right? We saw that happen throughout this week, almost methodically. They just, like every other day, they will throttle the market up, then they'll sell it off. They'll throttle the market up, then they'll sell it off. And so that tells me that there's a lot of still uncertainty and mild capitulation that's happening still in the market, where the algos and also the Wall Street people down in the pit are not necessarily on the same frequency, so to speak, because that's why you're having all this, inorganic, erratic movement in the market, up 300 points, down 600 points, up 400 points, down 200 points, this, that, and the third. And so again, it's just not making for a very, it's not making for a very healthy, again, market. And we know there are things out there that's causing it, to be in flux anyway, so it's not like it's something that's not new. We know this, that was happening here. I'm just getting this here for the family real quick. You guys forgive me. Let me do this here. All right, there we go. All right, so yeah, so we know that there's things happening in a way where, it can't be quantified, so to speak, right? And so, again, it just goes to show you that, no matter what, you plan for, you need to make sure that you always position yourself for the flip side of that to happen, right? Expect the worst, hope for the best, expect the worst, and trade in essence to that, that regard or reality, so you don't find yourself kind of caught, in the middle of these things. I mean, look at this. Look at John Deere here, and look at Applied Materials. Both of these companies here missed on their earnings. Deere missed brutally. I mean, their earnings number was so deplorable, it's ridiculous. And they lowered their guidance by over 3% going into the next quarter. That's a lot of money for a company like Deere. We're talking 3% of their gross revenue value. They're gonna be short of that potentially going into the next quarter, and yet the market started to reward them on a missed earnings per share, and lowered guidance, and it went from 143 up to 150. I mean, this is the kind of stuff that's happening in the market where that the market is not on the right side of reality, and they're just pumping and hiding. Meaning Wall Street hedge funds and market makers are hiding in any kind of stock that they can to try to console investors who are mad and calling them asking what's happening because they're losing money. So a lot of people who, especially the farm sector, who's getting brutally beat up right now because of the tariffs, they're trying to make Deere look good to save face, in front of the China tariff kind of debacle. And this is what this is all about. No more, no less. No matter how you try to swing it, no more, no less. And so you have a upswing about 3-4% in a stock that just had the most deplorable earnings that they released this morning. And because of that, Wall Street says, hey, we're just gonna buy. Screw all the people who are on the right side of the trade terms and who were very methodical in their metrics and their fundamentals to say, well, hey, they're gonna miss, and they're gonna miss pretty bad. And they're not gonna get rewarded today. But again, that's the market. Again, you can't force the market to do what you want, but we can make sense of why, try to rationale why things are the way they are. So you again to be a little bit more cautious, right? It's more of a call to the, to the wild, so to speak, and say, hey, be very cautious before you play certain trades, all right? Especially if you're gonna play these earning plays or whatever. It's always best in these times when things are happening like that, where stocks are missing on their earnings, right? And they're missing badly and then going up. These are the moments where you just stop playing earnings, right? Unless you're going to hedge your position and just wait for the next day after to kind of play the move afterwards, right? Don't get caught trying to foreplay it, because it may not turn out to be very, a good ending in that moment, right? You showed up, with flowers and you're hot and ready, $5 piece at, from Little Caesars, and you got your LeBaron White mixtape with, and you think things finna go right, and next thing you know, hey, everything goes the opposite. But either way, so that's what we have again. So it's a very, very unpredictable market in some aspects. So you have to play the intraday very, very cautious and careful. Again, not to be overly, exposed, and also not to, be sanguine of the idea that just in case things do present, a great opportunity, that you are comfortable and confident to be able to make the proper moves in your, in your decision making. So again, I just want to put that out there in essence to know, to let you guys know that if you already haven't figured this out, pretty sure you guys are already on top of this. You guys are super phenomenal. You guys are super smart, and that's why you're here. That's why you're investing, and challenging these, equity markets every day. But or even if you're trading Forex or crypto, whatever, you still have to be, again, very cognizant of, what's happening in and around you. And so you don't want to be, again, just too confident in trusting people who have the ability to disturb the market, that they won't do it particularly, because again, we always one tweet away from the market going, skyrocketing up or, plummeting into the depths of the ocean. So again, be very cautious of that, especially if you're going to swing trade into these plays that you're not, expecting to hold more than at least a week or so, right? Because again, right now, even to the options market, you have to start writing contracts out at least 2 weeks now. It's hard to even do weekly contracts because the erratic value of the movement is just crazy, and it's killing up all the theta. The theta is just crushing everybody, and so it's a mess. Contract open interest are not necessarily like it was, let's say 5-6 months ago. Where you can really kind of gauge that, the potential of strength of the stock movement based upon the OI, when the open interest value. There's a lot of puts in there. There's a lot of calls. Everybody waiting for the move. And so now it's like, pick your poison. And so that's what we're dealing with here. But nonetheless, again, guys, I want to come on again, just kind of share that with you guys again. I'm not going to be on long. I actually have to get out of here. Still have things to do. Just getting balanced over here in terms of my little life. A lot of things still, going on in terms of just trying to find that sweet spot where things, I can kind of sit still long enough to kind of start, sharing some good data with you guys, things of that nature. All right. So, but that's about it, guys. I just want to kind of share that with you guys. Peace, power, pride, family. See if you guys pop through. I see my family Cristiano, fan Devo. Hey, what's going on, family? Peace, power, profit to you. All right, my family, Mr. JRH in the house. Good to see you as always. Right. Also, already big up Mr. Universal Warrior. Thank you guys for stopping by. I know you guys are busy on this Friday. You could definitely be out there doing a lot of things, but just stop by, just say hey to your brother. I do appreciate that. Again, I didn't do any kind of mass promotion of this live stream, more so just kind of just came on. Right, just wanted to come on here, and just kind of share that a little bit. Since I tried to set it earlier and it didn't work out, so I was like, well, I might as well just kind of, do a quick little promo here, on a live value and just say, hey, this is what I was trying to do. So you guys can kind of get a little gist of that or a little wind of that. So again, I hope you guys are trading, again, smart and methodical. You're making good decisions out there, playing this market the way you're supposed to, playing this thing, very close eye on it. So you don't, again, kind of get caught out there too, too deep, or what they call in the deep end of the pool, right? We don't want to get caught in the deep end of the pool. All right. So I just want to make sure I kind of, stress that as much as possible. And so, again, my hat's off to you guys who are basically, the day trading warriors, no pun intended, infringement on Ross Cameron, warrior trader, but the day trader warriors out there like myself and many others like you guys who are brave in this market, moment over moment, in hopes of being in a position where you can, capture you some profit out of this thing, being able to benefit from it at some point here and there. And so again, my hat's off to you guys. So, it's a part of what we do, never, it's never a dull or a boring day in the stock market. Even though we have choppy days when the market is not necessarily giving us the proper volatility to get some nice movement in these stocks or whatever, but the headlines are enough to kind of keep you excited and glued to your screen at some point, if you have that at leisure to do that. But nonetheless, we will find opportunity out there one way or the other. My motto is very simple: if it's moving, I'm there, right? If something out there moving, and it's and it's up to date when it comes to the financial files, then I'm there, and I try to stay away from the sketchy stuff. Been there, done there, did that back in my real true penny stock days. And again, whatever floats your boat, as long as you make money and be very cautious in the process of knowing what you're doing. So that's all that matters at the end of the day, no matter what you trade, be it small cap, micro cap, whatever, pennies, whatever, mid cap, large, doesn't matter. Equity, options, forex, binary, crypto, whatever you trade, as long as you understand the process and what you're doing, so you don't again find yourself in some very abnormal positions. So peace, power, profit. I see my family over. Kristen stopped through. Good to see you. Over, power, profit to you guys. Salute to you, family. Right, the family. Brandon Jefferson came through. Good to see you. Over, power, profit to you. Salute, family. Again, so just want to kind of be brief, much as possible. Don't want to kind of make it into a a lengthy scenario, because I do have to get out of here, like I said. So, but as my description says on the live stream, this is what you get from a manufactured market rally, where again you're looking for any and everything you can to justify trying to bring people back into the marketplace, or get them excited about wanting to invest their dollars, or go back into their margin accounts, because a lot of margin accounts got blew up this week. One thing they're never going to really profess over CNBC or Bloomberg or Fox Business or whatever these different financial publications out there is that with all this erratic movement and and uncertainty from a president who doesn't seem to understand balance and ebb and flow of how people depend on them having a more responsible governance of how they put out press releases and this, that, and the third, because it moves and jolts the market, that this is just not healthy. It's not healthy. And so people are trying to trade, they're trying to invest, they're trying to do what they can based upon the basic criteria, what we go through under our methodology to learn how to trade stocks, the fundamentals, the technicals. And what's happening is, no matter if you well read on all those things, a lot of times you got to throw all that stuff out the window and just go trade whatever the market's going to offer you for that day. No matter all that work you put in, researching and looking up, balance sheets and 10Q filings and Form 4Ds and all these different things, and checking the RSI where they at in terms of their weekly, monthly, quarterly projections, and I mean all that stuff. The charting, the 52-week chart, this, that, and the third. And you line up the next day, to get on the football field. You went over the plays and just religiously till you got them ingrained in your head, and then you get in front of a defense, and it's like, what's this? Hey, I mean, they only can run 3 or 4 different sets. This is something new. What's all this? And that's basically what you're getting in the market, right? They throwing all kind of curveballs at you, right? All kind of different, cans of paints at you. All right, so. Again, but this is why, again, you better be very, very, very thorough in knowing, what you're going to get into day over day, the what, why, where, and when. And that is predicated upon what the market looks like right now when you go look at it. Not so much of, okay, I studied the day before, that's fine too. You still got a little kind of, pre-warmer, but when that whistle goes off, that gun fires or whatever, the bell goes off, it's like, okay, let's see what's going to happen. It's one of those scenarios. So again, that's why I'm always stressing that 9:50, 10 o'clock pullback theory, right? Let the market kind of open up first. I know sometimes you want to jump in like right away. No, I think right now it's good. And what happens is the market reverses, or it pivots, or it does something crazy, abnormal. Then next thing you know, the trade kind of went haywire on you, right? Because again, in these moments, like, what we're witnessing now with the volatility somewhat creeping back into the market, as long as the volatility stays above at least $16 to $15, you still want to be very cautious, right? Because it's still in a moment where, any given moment, people are going to start, hedging all this kind of abnormality that we're getting out of the White House every day. Seems like almost like every other day is something. That's not even, withstanding the whole issue that's dealing with Hong Kong right now, the protests over there, right? The whole issue. Again, we're still getting with the tariffs, right? And then, Trump bluffing them, and they calling this bluff, and then it turned around and backfired on him, right? The recent scenario, right? He had to eat crow off that last 10% tariff he tried to threaten them with, and the people looked at him like, okay, and they just sat there. Then he had to backtrack because they figured out at the end of the day that 10% extra tariff or $350 billion worth of extra taxation, so to speak, was going to be carried over to the consumer. So people like you and myself and our family members or whomever was going to have to carry that bill, because you best believe these companies were going to pass that bill over to the consumer, raising the prices. And so, he got all kind of, people calling and cussing them out, and he had to walk back that whole 10% tariff and delay it until December, because that was going to be a very ugly, I guess, marketing season where we're going to go through this marketing blitz season, and, all these holidays and this, that, third, to get money out your pocket. This is how the country makes their money by, throttling consumers, throttling you guys off of unlimited, marketing schemes to employ, so to speak. Oh, Memorial Day, Labor Day. I mean, y'all know all the different holidays out there, and then everybody just still, feel like they have to be a part of that. No disrespect if you do, if you don't, but basically, best believe it's a marketing ploy, because they need extra moment to kind of juice the economy, right? To kind of stay afloat and to keep these companies somewhat, somewhat running sufficiently, best as possible, by catering to your FOMO, so to speak, fear of missing out on a good sale or a good deal as we perceive it or think it to be. But ultimately, these are not really good deals, because we know that now as investors, that when we look at what the price to margins and things like that, things of that nature, we know that the price of goods that they're selling to us are pretty much crack prices, and they're marked up 200, 300, 400%, 70%. It's like, no, I'm not going to pay that. I know how much they pay for, they pay to get this good, landed and boxed up, and, to distribute to the retailer. No, I'm not going to pay that. I'll wait for it come down, till it comes down a little bit more. All right. You're not making these, kind of spur of the moment, payments or, decision when it comes to your money more so now, because now you realize the power of financial literacy, right? You realize the power of learning how to stretch your money properly, right? And, what's really a good buy and what's just pretty much a just marketing ploy. to try to, you know, play on my emotions, so to speak, right? There's a lot of people out there right now that are just emotionally spending right now, right? Just because somebody says a good deal, right? There's a lot of sheep out there, right? We know America is definitely a sheep nation in a lot of ways, because again, you know, that whole idea is the greatest country on the planet, all this, that, the third, does come with a value where they need people to kind of fall in lockstep with their premise of, you know, hey, spend money, you know, make us look good and this, that, and the third, you know, whatever. But that's just, you know, my little half a soapbox spiel. But that's it, guys. So, you know, again, just sharing that with you all in a way where you guys can, you know, just think about it from different aspects, different angles, you know, different vantage point, different viewpoint, different leverage points. And so you don't become, again, too complacent. You know, that's been a theme I've been kind of pushing a little bit this week. You know, obviously don't become complacent in any value or direction that you're kind of, you know, looking at the market. Because again, there's just too much going on the macro data side of the economy that, you know, that tells us, even though they try to push to get this next so-called emergency rate cut by the Feds, at least 50 basis points, which they're trying to push for, which is obviously unheard of and that's nearly not needed. But they're gonna, again, position the stock market to be the somewhat the henchman for Trump. That's basically what's happening. They're holding the stock market hostage, right? And obviously that trickles down here, because y'all know how this thing rolls. It rolls down here from investors, Wall Street, down to the common man and woman who obviously don't get the short end of the stick based upon him trying to have a favorable rating, approval rating, because of the fact that he's holding the stock market hostage as a way of saying, hey, look, see, I got the market up, down up 27,000, this, that, and the third. And a lot of that has came on the back of a lot of hope, right? Not necessarily a lot of real tangible, viable things that we can say, okay, well, was really good for the common man, right? And I'll say that because, you know, if you ask the average person, you know, are you really feeling like you're benefiting right now, you know, from what the White House and the government says a great economy right now? You know, the one thing I can say, because they've, you know, caused the market to kind of go unbalanced and the interest rates are always, you know, out of flux right now. Though the housing market is very low right now, right? The housing market got slammed in 2018 on the back of the fiscal year. Now, interest rates are so low now, especially if you look at the refi your home, if you guys got any properties out there, right now is the best time to go refi. I mean, you got lending comes out there just willing to give you money on top of giving you a low interest rate. And that's how crazy it is. Now, typically, we're just opportunists. We're looking for the benefits. We're looking for the opportunities. Now, it's good to be in a position where you can make those kind of moves, but if you ain't really financially ready to make that move, okay, you may miss that window. It's one of those kind of scenarios. Not like the economy is running so good that we'll see this, you know, 6 to 7, 8 months from now, because they just really good at balancing the books, and it's making a good way of life for everybody. No, these are erratic moments where it's like you got to get in now, like double dutch, right? You're going to get in now, or you're going to get tripped up later, you know. So it's weird, but you know, but that's why we study this stuff. That's why we are students of the game. This is why we take this stuff serious, because again, within this knowledge that we are able to acquiesce day to day, we can pass this on to our family member, our friends, our coworkers who may not know none of this, right? It may be foreign to them. And so I think, you know, these are moments where, again, you really get a chance to show your strength, your intellectual, you know, financial prowess to a lot of people who maybe had no thought that you was this, you know, intelligent about these kind of things, right? You may even if you still work, you can go give your boss a couple pointers or two. And he's like, man, I didn't know you know all that. Man, you about to get a promotion. Like, yeah, I'm only just been here for a little while, trying to start my own business. But again, this is why you keep one eye open at all times and one ear always pressed to the streets, because you need to listen. And I say streets mean definitely Wall Street and the global streets too, because the global marketplace as a whole, right, it is also a lucid, mural, so to speak, because again, we're talking about all these different countries out there, and the value of what they're going through right now from a global economic, positioning right now. They're getting throttled. They're getting beat up. They're getting overran because of these tariffs, this tariff fight between China and America, and their economies are constantly still sinking. I mean, we got a lot of these companies right now are definitely deep in the red right now in terms of their GDP values. They have no growth. They've done so much quantitative easing over the past year alone that, I mean, if the global recession really hits, they have no extra money left that they can stimulate their economies with because they used all up their life reserves too early, too soon, trying to get ahead of what they think Trump and Xi is going to do one moment or the next. And that's sad because you got two countries, two, basically you want to say countries in terms of America and China, that control so much of the economic backdrop that the entire world depends upon. Right? Because a lot of these countries, we already know, they don't have really raw materials to benefit. They need exports. They need to keep blood sucking Africa. Y'all know the deal with that. Everybody benefits off Africa's resources, right? Because they have none of their own. And they're giving people peanut prices for their raw goods and services, which they need to be given a far back value for, but they're not going to do that as long as they feel like these people don't understand what they have. But long story short, that goes back into the raw material aspect, the rare earth minerals that China has been able to kind of, again, amass over time because they learned how to be a power player, get into these different countries that are so-called, quote unquote, they call them third world countries, and buying up all the property. And within those property rights that they're buying, they get all the mineral resources in the ground, like Africa, like in the Caribbean island. They're buying up the Caribbean island right now, Jamaica. I mean, we already know they're running them up through Africa right now. They are the new so-called IMF or the S&P program, the structured, standard structured and what's it called? Structured procedure. I forgot what it's called. Don't quote me on it right now. I know it, but just my mind all over the place. Nerd moments, right? But either way, again, that becomes a problem now because now if you hold the minerals hostage from other countries, like raw materials that they need, gold, copper, iron, lead, all these aluminum, all this stuff that China now has a big monopoly on. Well, what does that do to the average consumer that has to go to the store and pay for these materials when they're kind of already polished and put on the shelf? You're gonna have to pay an extra premium for it, and that's basically what's happening in the midst because the balance throughout the global scale is just not there. It's just not there, all right, because of the trade war. So whether you're on the right side of this whole ideal of is warranted or you don't, doesn't matter at the end of the day, because again, at the end of the day, you're gonna have to pay whatever the price is on the shelf. I mean, you have no way to dispute that. You can't go to Walmart and say, I'm not going to pay that price today, right? Because I know Trump and Z and everybody else causing this price to go. I'm not going to pay that. They're going to be like, okay, well, yeah, the door is that way, right? Yeah, the door is that way, right? You have no say-so in that. Right? So the best thing we have as economic warriors, right, in terms of, investors and traders is we have a unlimited access to the global markets in a way where we can go in there and find money in a way to kind of help compensate, paying these prices when people who are a set salary or a set income and this, that, and the third, some of them don't have that extra money to kind of put up, to pay these extra prices for milk. Corn just got slammed. The price of corn went up, of all things. This GMO radioactive feed corn that they feed hogs, cows, that's the most wickedest corn on the planet. Again, I know y'all probably like, hold up, African corn, you're going there. But I just keep it weird. I follow the data. I follow the science and the data. The price of feeder corn is skyrocketing of late because of the tariffs that's hurting the farmers. So they got to raise the prices of corn. You used to get, I guess an ear of corn, if you still eat that stuff, maybe what, 15, 20 something cents an ear? Now it's up a lot higher now. You're paying the prices, what you would pay for like one dang near apple for corn. The most plentiful crop on the planet, dang near. And so that's another extension of why we're dealing with, again, this whole global economic castration, so to speak, for lack of better words, scenario based upon these old tariff scenarios. And it's actually affecting the consumers. So they want you to bear your, bite your tongue and pay them extra few dollars because they feel like it's all for the greater good of the country. Right? And you're like, well, hey, I didn't start this war. And if it's to be something noteworthy of a benefit to me, show me the data that shows me where I'm going to benefit from this, a year from now, 3 years from now, 5 years from now, 10 years from now. That will make people feel a little bit more comfortable potentially if that's the case. But again, they're not running it the way they should in that particular, positioning, and they're just leaving people to kind of figure it out on your own. And again, it goes to show you people ain't got your best interest in mind. But again, whether you're for, whether you're against, that doesn't matter, and that's from a personal perspective. But again, you have to realize, you being the individual, You being the ruler of your environment, the king or the queen of your domain, you the president in your home, you need to be protecting yourself, being in a position where you can find, multiple streams of income to, to make sure you stay comfortable, right? Don't depend upon the system, again, in that perspective, to kind of shield you or, throttle you up or throttle you down because, they have the ability to kind of cause this erratic value in prices and this, everything else out there we're dealing with. And so that's why you need to be very entrepreneur in everything you potentially try to set forth in life, because again, it's better to be in control of your own destiny than dependent upon somebody else or some other entity to, again, levy you opportunity. Like the worst feeling in the world to wait on another man or another woman before you can make a power move, right? That's why I always tell people, be your own owner operator, best you can. And if you are on a job somewhere, understand it's just a stepping stone, right? It's a halfway house, for lack of better terminology. It's a halfway house until you get to where you need to go in life, to be your own owner operator, to be your own, boss, so to speak, right? Yeah. Again, you guys know my many models when it comes to these kind of things, right? Supplemental income can become primary if you do it right, right? The goal is to be your own boss. The goal is to fire your boss, right? Go in your boss office and give them a pink slip. Like, hey, here's your pink slip. You got 2 weeks, and I'm up out of here, right? Because I got other great endeavors I could be, positioning my time for, and not be stuck here for 8 hours just to watch the paint dry, watching the clock tick, hour for hour, right? And then have to deal with everybody else's problems there in your mess every day, right? So, but again, whatever. So that's it, guys. So I just want to share that real quick. I am about to rush up out of here. All right, and the market is ready, now it's starting to kind of, like I figured it would, double top at some point, roll over. So 289 seems to be the line in the sand today for the S&P 500, as you guys are watching it yourself possibly. The 289 handle on the S&P 500 has proved to be the resistance of the day. Tested it twice now and has rolled over since. Now we're on the back end of the day, so you best believe people are probably going to take a little profit here now that benefit from riding this market up on this manufactured rally today. And I mean, make no mistake about it, today was a manufactured rally. Whether you agree to it or you don't, but exactly today was a manufactured rally. And I just, hope you guys make money off of it, in understanding how to ride the wave. The trend is your friend, benefit, when you can, and move on. As simple as that, right? So, but that's that. So, again, so I do look forward again next week. I do look forward again next week that, we're going to try to get this cracking. Again, I'm trying, guys. Trust me, there's so much stuff going on around me a little bit. I begin to tell y'all to have, not necessarily bad stuff. It's just a lot of things we're trying to accomplish. And it just requires a lot of my time, and trying to be, stationary long enough to where I could do these kind of things. And that's the whole issue at this point until we can find that ebb and flow here. And the things we got going on, the things we're trying to get acclimated to get our system analysis up and running properly. Right. So as soon as I thought I was good, turned out I wasn't so good. Right. So that's a part of the reality too. So, but again, I'm working on it. So just bear with me a little longer. Before you know it, I'll be comfortable sitting still long enough to where I could do a full 8 hour like I used to do of market analysis, or just sharing my screen, or just sharing trading with you guys, and definitely get back to a lot of the things that obviously my responsibilities are affording me, especially also being a mentor, a trainer, whatever you want to call it. Actually, in the day, y'all know me, I'm just your brother. Y'all know how I like to look at things. I don't carry no fancy titles, none of that stuff. I'm like, hey, how can I help somebody get to a bag? Because when one teaches, two learn. Y'all, that's one of my favorite quotes by Robert Klein. And that's just the reality of things. When one teaches, two learn. You're learning as you engage. You're having that that exchange, so to speak. That's how knowledge is birthed. That's how think tanking happens. You have to engage the data, engage conversation, pull it out of each other, extract the best of each other. So in moments like this, even though I'm doing all the talking, I'm pretty sure a lot of us already kind of in unison in thought, because we are already moving on that same paradigm, right? We market traders, we're investors, we understand how to go and seek and find the money, as opposed to waiting for it to happen, right? And that's what makes us special. Again, I always like to tell you guys that. And I know a lot of people don't really realize what you're doing. They may not understand it. They give you a whole lot of flack behind, like, man, what are you doing? What's this investing stuff? And I mean, they have no clue, right? They don't understand 3 years from now, 2 years from now, 5 years from now, 10 years from now. And it's like, man, what happened? Wow, you're here now. You're doing this, man. What led you to what got you here? Dude, you saw me, sister. You saw me. You saw what I was doing. You saw my sacrifices. You saw why I wasn't hanging out with y'all every weekend and spending 2 or 3 hours at the bar or going to whatever. I'm in my mode right now of trying to establish a future beyond my present reality, right? And that's important, right? Because you're forward thinking, into the future more or less, and understanding that at some point when we're older, we want to be comfortable in a way where it's like, hey, whatever I want to do today, I can do it, right? And I'm not punching no clock at 65. That marinate, right? I'm not punching no clock at 70 years old, stuff like that, which is unheard of. You should be living your best life at that point, right? Now I still have to go clock in and look at people like, what am I doing here, right? But anyway, that's that, guys. So peace, power, profit. I see overseas that pop through. I see my family lawful them popped in the house. Good to see you, family. Power, profit to you. Salute, family. So again, just want to share that. No more, no less. You guys see what's going on in the market today. Again, we live for this stuff. We are, again, masters of our destiny. We get the right to write the checks, and depending upon how hard we study and how well versed we are, we stand to benefit greatly from it. If things work in our favor. So again, where you may not be there quite right now, and you're plugging away still, you're learning, you're studying, you're being a good steward of the industry, right? Open-minded, not myopic, not staunch in one particular belief over other, be it bearish, bullish, whatever. You want to make sure you're balanced in both, right? There's no such thing as a perma bear or perma bull, even though you may, like one side over the other more than average, but at the end of the day, the trend is your friend. And if the trend telling you is up and to the right, then guess what? You need to be position yourself to trade up and to the right. Unless you just gonna go out there and search that needle in the haystack reality and find that one that's getting beat up, that day, and you shorten it. And that's to happen. Stocks always, there's always up and down movement throughout the day, no matter what. All right, nothing just goes straight up. So likewise for the opposite, nothing goes straight down. At some point, it's gonna pivot, it's gonna bounce. Next thing you know, it's gonna be looking at blue skies, right? Potentially. So that's that, yeah. So peace, power, profit, guys. I'm gonna share my screen here for a little while before I get ready to shut this thing down again, because I'm gonna have to get out the door. And obviously, I got to make sure all my stuff is set, so I'm not caught out there in the event that something crazy happens in the market. Hey, what's going on over Gordon? I see you done creep through. What's going on, family? Peace, power, profit, guys. Everybody, I hope I kind of and my family JR turned and popped in the house. Good to see you, family. Peace, power, profit to you guys. Right, family coming through. Right, I know y'all out there getting to it. Handling your business as always. Again, I can't say enough about you guys. Really just taking it to the next level. Again, you guys are challenging the status quo. You're making moves. Again, you're being, the consistent, person, that you are capable of being, and learning how to do this at a very high skill, and a high level. And I mean, the end result is going to be what? The bag. Either way you look at it, you're going to find your way to the bag in a very, very lucrative way, just by staying humble and hungry in the same breath, right? And you putting, you constantly striking that, y'all know striking that iron, right? Beating that iron, eventually to it kind of molds and conforms to what you want it to be in terms of that. And so, the end result is just a payout, right? The end result is you being able to be in control of your own destiny financially, right? That's why we're here, right? Because we see it, and we know that there's a lot of money being made there every day, and a lot of people have no clue. I mean, they have no clue. They're like, man, do you actually make money doing this, or is there potential to make money in it? They have no clue. And so again, stay patient, stay humble, stay real, and again, it'll come. It's gonna come. I mean, it's no other way around. It's gonna come eventually, And so, and the goal is to be consistent. Again, to get on base, not necessarily swing for the fence every time. Get on base. Learn how to play chess, not checkers. Think the long term. Even though we invest day to day, but still think long-term in terms of you being able to do this, a lot later in your life, because you want to position yourself now by making smart, strategic decisions, as opposed to just making a lot of, I get a chance, I can gamble today, I'm gonna bet it all on, Beyond Meat, right? Bet it all on Apple or something, no, just take your time, never, overexpose yourself to any of these assets, without having, the correct thesis to kind of give you that kind of conviction, right? Outside of that, it's just not worth it. And if you miss your trade or you miss your entry, don't chase it. I know that's the hardest thing to say. Do not chase it, right? Let it come to you. Let this, this market, as ratchet as it is, a lot of times, let it come to you. Let it earn your money, right? Look here, no favors. That's how I look at it. They need me. I don't need them. That kind of reality. And so that's why these companies do what they do. That's why, they'll pump their stock on the news release, and they do an offering literally, at the end of the market session. After the stock, they ran up about 5-6 bucks, and they turn around and do a offering because they not strapped for cash, because they ain't balancing their books properly. And they say, they erase all the gains they in there that they picked up for that day, leaving a lot of people stuck holding the bag because they thought the thing was going to keep running. And so again, every company out there is a pump and dump. I hate to bust your bubble or burst your bubble. Every company out there, Amazon, Apple, Nvidia, Netflix, your favorite stock, it's a pump and dump. You heard it here first, right? Right? All of them pump and dumps. I don't trust none of them, right? So again, that's just the reality of things, but whatever, right? But that's it. Hey, what's going on, family? Derek, that's my family, Derek Hartway, that came out. What's going on, over? Peace, power, and profit to you, family. Salute. All right. So, but that's it, guys. So I just want to share that a little bit. As always, I try to come on when I can. I try to share wherever I can, because I know it matters, right? In terms of being able to, get in front of the family and share a little bit what I got. I mean, you guys have, again, the type of knowledge that, you guys can come on here and teach as well. And again, that is the goal, to be able to do that. So when you guys do have that free time, come on the live stream, get your audio stuff together, get your good little, your little camera together, whatever you got, your little web camera, and let's go, come on, man. Let's think tank and round robin together in real time and trade this market, right? Or share knowledge with, with one another, whatever, but that's the ultimate goal, right? And so we can, do things in real time. I may miss something, you may catch it, right? I may catch something, you may miss it. I can, pass that rock off to you. Hey, check this real quick. Look at this. This is what I just saw. This is what the scanner just popped up on, And so y'all know seconds matters in this. Seconds matters in this, right? Seconds matters in this. All right. So entry is everything in a lot of ways. It definitely gives you the better vantage point when you're on time, right? All right. So that's it, guys. So peace, power, profit. I'm gonna share my screen here about next 20, 30, 40 minutes. And not probably next. I got to get out of here. Yeah. And but just to let you know what I got. I got, obviously Beyond Meat still, rationing in that. I was able to add to the lot lately because I kept a value of shares in it going on now about a week, close to a week. And so again, I had to pay them little tariff price that come along with that. But I'm all about positioning. And so if I can trade other stocks very well to kind of make sure I'm kind of greased properly, then I can get away with float the stock for a little less time. Right, get it. Phone going off in the office. Yeah, ain't nothing but a telemarketer. Y'all know how it is. You hate having house phone anyway, internet. But that's it. So yeah, so applied material, hit that up a little bit. I bought puts in that in the earnings, benefited from that. I lost on John Deere, even though they missed horribly. Stock market wasn't having it. They pumped it up. That's the game, guys. You can't, that's the game. Can't get them all, even though you're right. That's the market we trade. Nvidia, reality with that, same way it pumped up. So again, there was some other good trades out there though that was very beneficial and lucrative for, and so we benefited, and that's just that, so I'm not gonna complain one bit. I still had a little bit of my Apple trade left over. I added a little bit to it, got some more downside when it spiked into that 208, 209 area, got in a little bit up there, added a little bit, and then added to it as I saw the breakdown happening. And so I'm gonna probably close a little bit of that out today. A little bit of Beyond Meat. Beyond Meat finally dumped. Yesterday was just beautiful. I crushed it in the puts. I bought puts yesterday. Man, y'all saw it. If y'all was watching Beyond Meat yesterday, that's all I'm gonna say. It was like finally the levee broke, right? For lack of better terminology too. And the water broke, right? If you're pregnant, well, that might be good for some of you guys. I don't even know what to say. it happened. It started selling off finally. And it was a very lucrative trade. I mean, that thing dumped all over $23 from top to bottom, somewhere around there. So if you was up there near the top and you was able to get your puts, they was a little expensive, but it wasn't as bad as it used to be. Man, the money was made yesterday, and Beyond Meat was just crazy. And got a little bit this AM when the market first opened up, it dumped again early. Rebounded since then, got back up, but now it's starting to kind of turn back over a little bit on the back end of the day, still showing some weakness from that sell-off from yesterday, not showing the kind of strength that is back. So I'm not fooled by it, at one bit. I still think it's in a very crucial point, losing some major moving averages. And so now it's just fighting for air to stay above at least nothing else 130. When it gets below that, it can get real ugly. It can get very ugly. And so as we saw today, it got down there, 135 from around there, 136, 135. And so it's tested some major support levels, and they're getting beat up on them. And so bulls are starting to say, hey, let me take what little profit I got, so let me get up out of here. I'm out. Right? It's been fun, but it's time to go. And so TRA 2.0, TRA 2.0 in a lot of ways. Even though probably a better company by all intents and purposes, but still, we know a pump and dump when we see it. Book value does not warrant a 7 billion company that just came on the market literally about 2 months ago, and you've yet to prove yourself. But again, Wall Street is not sane right now. They're very irrational and they're very irresponsible with their clients' money because they know that this bull market is getting ready to come to an end, and they're trying to juice every little inch penny they can out of it. They're running stocks that shouldn't be running. They're doing every abnormal trick of the trade they can to try to make much money as they can before this this market actually begins to kind of actually slow down for a change and roll over. And it's going to happen one way or the other. Either going to get on the back end of this year, or it's going to come in the election year next year, the election cycle. One way or the other, 10 years or 12 years almost at this point of a bull market, 11, 10 years, 12 years of a bull market. At some point, you have to kind of pull back a little bit. Right? Let it stay and breathe. Let some new traders come in at some real discounted prices. Stop all that trying to price everybody out the market. So only market makers, hedge funds, and banks can really benefit because they got these massive accounts and nobody want to pay $300 for a Beyond Meat stock that just came IPO 2 months ago. Like seriously, like what? I'm not gonna pay for that. No, again, I'm straight. Like no, I'm straight, fam. Y'all keep that over there. I'll wait for it to come down on price, right? Or I go get me some of those little cheap little Dollar Tree, the more quinoa, Beyond Meat burger patties over there. Might have a little soy in there. No, don't get that soy. Stay away from soy. All right, but y'all get what I'm saying. All right, guys. So it's Power Hour, 3 o'clock just hit, guys. Again, we'll see what happened in the market, see how it closes out. Crazy day. Y'all seen it. Y'all saw it. I hope you benefited from it again. And going forward, looking into next week, just be very cautious. Again, the weekend have become, Twitter, Twitterland, back and forth tit for tat moments, between China and Trump. More so Trump. Trump the one that's doing all the talking. The Chinese just in there looking like him, looking at him like this. They're not doing much talking. They just letting him do all this bluffing and talking and like a chatterbox, overexposing his hand. Again, y'all know how to think. When you doing all the talking, you give away all your secrets. You pretty much, showing your hand because you can't keep quiet enough to observe, listen, and strategize. And that's what the Chinese are doing. They're just sitting there quiet. They're not going back and forth with this idiot. They're just watching them, just say all this stuff. And again, whether you for Trump or you're not, that's fine. I'm not here to beat up on your president, but I'm my own man. I don't ascribe to none of that foolishness. I ascribe to what I can, effectively do to make my life better. So I don't play that old, ride somebody else's, y'all know them, peanuts, right? I'm my own man. And so reality is that, there's a lot of people who are just following and have no clue, and they're going to be led to slaughter, like a lot of people have following people and not necessarily being their own, orchestrator or generator of their own reality, right? So at the end of the day, again, from a political standpoint, y'all seeing it just like I am. He's doing all the talking, and the Chinese are sitting there like, they ain't doing nothing that they claim they was going to do. They're not, adhering to any of the stipulation that, U.S. is trying to put on them. as if they, I mean, come on, they're superpower too. Like you can't, threaten me with that, bro. I'm straight. I can hurt you more than you actually can hurt me. We control a lot of the raw materials. We control a lot of the goods that come in your company. In the country, anybody making no products over there in America? Last time I checked, y'all factories arrested. Go through Ohio, go through Michigan, go through, Illinois, go through Pennsylvania. It's rusty up there, family. Some of y'all live in the area, rusty up there, man. Your manufacturers, come on, man. Y'all know what it is. It's not. But we understand over here. We understand it. A lot of everybody else may not, because they're like, yeah. They cheerleading. Man, look at him. I'm straight. Right, but I'm like, I'm straight. Yeah, so, but that's that. But that's it, guys. So let me share my screen here. Get out of here for a couple of minutes. Obviously, I have to shut it down before I leave out the door. But again, just want to share that. Y'all know your brother. Just want to share. All right. Every time I can come on and add a little bit of sauce. So some of this stuff you guys already know anyway. But it's good to always bring it. Speak about it and whatever. So if you guys do want to come on to the Stream Lab and talk, and conversate about your trades, just talk in general about what you see in the markets and so forth. You guys are very well much welcome to come on. One thing I do like about this Streamlab thing, you can, bring people on and kind of like Google Hangouts, but I think it's a little better, just my opinion. I don't know. Google Hangouts used to be glitchy and janky at times and all kind of foolishness, whatever. But you guys are welcome to come on before I shut it all the way down, to get out of here. Maybe discuss what you seen in the market, what you like. Hey, what's going on, family Marcel? Hey, what's good? Good to see you, family. Good to see you. Open palm profit to you, right? Yeah. So you've been getting at it late. I'm liking that, man. Like when people get excited about this opportunity, man, because again, amongst many other things that you may have going on in your life, one thing you can say once you become more conscious about investing and how you can use it to benefit yourself is that you're on the right path where you can find out how to get money without having to deal with nobody else, right? No middleman, right? And it doesn't require you to have any kind of abnormal education, all that kind of foolishness like that. None of that stuff matters. You can teach your brother off the corner how to do this. You can teach children how to do this, right? There are children out there got more exorbitant portfolios than people out there that are around 30, 40, 50 years old. 8, 9, 10-year-olds, 10-year-olds, 15-year-olds, and they're already early in the game. They're taking their allowance money and putting it in Robinhood, Stash, Acorn, a TD account managed by their parents, and they get to the bag early. Imagine how they're going to be 4 or 5 years from now. Beast, right? They're going to be beast by the time they turn 20, 21, 20. Y'all already know what this stuff is. This stuff right here gets better in time, right? It ages nicely. The way it's, people say those things when they say about cheese and wine. No, this gets better than all that in time. But you have to say, again, you have to engage it. You have to stay, a student of the game. You have to stay, humble enough to kind of research and ingest the data in a way it's going to benefit you. The rest is history after that. Again, so after that, it's like, bruh, where that bag at? You here for the bag. So again, if you guys want to come on and talk about, I won't be just standing in front of the, because I'm gonna be moving around a little bit before I get out the door. But you guys are welcome to come on and share what you got going on. In the trades, what you may be thinking about the market or whatever. You guys are welcome to come on here, to the StreamLab or what's our StreamLab, StreamYard platform to kind of go over what you're looking at and share what you got going on. All right, and so you guys got a lot of knowledge. You might be a little nervous and may not. You want to kind of get on here and talk about this stuff, but you guys, man, trust me, y'all leaps and bounds ahead of a lot of people. So don't be timid about that. You invested in yourself. Hence, that's why you became an investor. You took the chance on yourself to realize that this stuff is not rocket science. As people try to make it seem like it's just something that's larger than life and no one can do it unless you have PhDs and BAs and versed in all the lingo and the jargon. No, you don't need none of that. You just need to understand fundamentals and technicals and data researching. That's all this is having the most, the most viable data, to deal with the market from day over day. Once you learn all the basic technical stuff and how to read charts and candles and lines like that, the basic stuff, you don't have to do nothing crazy with that. You can get to a bag in this. There are people who get lucky and make $20,000 or $30,000 in a day. Lucky. They follow the tip. They got in the trade, they know it's going to drop beyond me. Someone just told them, hey, this is how you do it. This is all you need to do is learn how to do it. And they say, okay, I'm going to buy It's $1,000. I'm gonna buy $1,000 options, you know, and but you know what I mean. I think it's gonna drop, right? Or you said it may drop, and the thing dropped like $23 yesterday, and they might have bought like deep in the money as well, maybe like the 150 puts yesterday, right? Or the 145, 147 puts yesterday, you know, excuse me, the 160, 160 puts and stuff like that, and the thing dropped all the way down to like 130 something. Got lucky and made like $20,000-$30,000. I saw that some of the couple of rooms I peeked in yesterday. Some guys, you know, 10,000, 30, 20, 30,000, you know, 5,000, a couple hundred, but whatever. I was like, see, this is why a lot of our people just have no clue. And all they did, push some buttons, bought it, sat and watched the money pile up, closed it out, and that's it. And they like, man, what? I just did what? I just made how much? Like, okay, you know, but whatever. All right, that's it, guys. So let me go get up here, go handle this. You know, I share a couple of little trades I got going on at this point here. Let me see, I share my screen. If you guys do come on, y'all have the power to kind of, you know, share your screen as well. You know, if you decide to. I know you guys are busy. It's Friday. Again, this is kind of spur of the moment impromptu anyway, so you know, nothing special about it. You know, I didn't plan for it to be anything, you know, lengthy. Although I know when I get to talking, I get excited because again, I know I'm sitting in front of family that actually gives a damn, right? You actually give a care because you want to be a part of something that can benefit you in terms of the knowledge sharing, right? You guys are already kind of learning on your own anyway, but you know, you also have a place where you come out, you know, come back, kick your feet up, and also share, you know, that same value with people who understand what you're talking about and what you're going through. You know, so every other circus can't do that. You know, they're like, man, we don't know about all that over there. So they have no clue. All right, but that's it. So I'm gonna share what I got going on, and I will, you know, I'll be back here before I get out of here. You know, and I hope you guys are benefiting from today. I hope you guys are getting to the bag, and I hope, you know, you remain again the consistent, you know, student of the game, so you can benefit, you know, larger than you know, just, you know, take this thing to the next level, basically. You know, take this thing to the next level, right? And so, you know, my hat's off to you guys. All right, so let me. Oh, I gotta do it where my camera is not. Let me see. How do I cut my cam and still run it? I think we do it that way. Yeah. Let me see. I think that's how I'm learning this thing. You know, it's a new little platform. I like it, but I'm learning it. So I'll let CNBC roll. If you guys decide to come on, matter of fact, I can make sure. Let me make sure it shows the entire screen where it's not just showing my. There we go. All right. Yeah, I like this a lot better than Google Hangouts. It's more scaled to do it, you know, in a way where, you know, it's really cool. All right. All right, so I cut up CNBC and I just let it ride, you know, while I'm upstairs, get some things taken care of.
So that's why I hope the central bankers will come out and say, we're going to slash rates, we're going to inflate our way out of it, and then oil should move higher. Michelle McKinnon, thanks for joining us. Great to see you. So to come here on the closing bell, we've got, of course, the close, which is 50 minutes away. We're currently 274 points higher on the Dow. The high was 334 for the week as a whole. We're down about 1% now on the S&P. General Electric CEO Larry Culp marking a line in the sand by buying stock yesterday, and it has helped the share price rebound. Was yesterday's shortfall overblown or just the beginning? We will discuss.
And as we had to break, here's a check on our data tracker. Weak data as housing starts dropped for the third straight month, but some interesting numbers beneath the headlines. We're going to fill you in on those. And consumer sentiment coming in below estimates, dropping to its lowest level since January. We got more closing bell after this break.
today.
Welcome back to Closing Bell. Here's where we stand with 45 minutes left to trade. Up more than 1% for the major indices, up 2% for the Russell. A nice healthy rebound to end what has been a crazy week. We're still down though, week to date, around about 1% for the S&P 500.
Yeah, transports are rallying 2% today too. Another one to watch. General Electric shares, speaking of rally, are also soaring today after CEO Larry Culp bought $2 million worth of stock yesterday, doubling or nearly doubling his stake in the company. Between that and the purchase he made earlier in the week as well. The vote of confidence comes after a rough day for GE, the worst day for the stock since 2008, after investigator Harry Markopoulos released a report alleging GE is covering up accounting fraud. Here is Markopoulos on CNBC yesterday predicting doom for GE.
GE is losing $5.27 for each dollar of premium income they are taking in. Those losses are unsustainable and they're growing at an exponential rate. For 2018, they grew at 60% rate. It's growing exponentially, and it's going to make this company probably file for bankruptcy.
GE Director Leslie Seidman appeared on Closing Bell yesterday to refute the allegations and questioned Markopoulos' motivation.
He seems to be conflating all of those different bases of accounting. Now, we can question, is it because of incompetence? He doesn't understand the accounting standards here, or is there some other motivation? You know, it's not acceptable under GAAP to just say, let's make the liability bigger, or, you know, let's take the statutory basis and book it for GAAP. That's not how this works.
So joining us now to discuss is Brian Langenberg, a principal at Langenberg and Company. Brian, thanks for being here today. Real simple question. Why is GE up 9% right now?
Well, it all depends on where you start from. And let's just start with Mr. Markopoulos' report. You know, there's a kernel of very good analysis in here. His work on the long-term care liability is very good work, but there's a lot of hyperbole and innuendo around it. So why is it up 9%? Well, it's just math. I mean, first got slammed significantly with the release of his report. Now it's bouncing back because as we really start to digest it, we can look and see, okay, what here is new and what here is rehash, and no small part of this is rehash.
And to that point, Brian, what is your assessment of both that report from Markopoulos and also the company's response?
Good. So first of all, in terms of the report, and I won't tell you I've memorized all 170 pages, but the core analysis he's done on the insurance side is very good work. The broader theme of the report and the innuendo, there's a lot of garbage in it. And with respect to the company response, you know, let's be realistic. If you say something bad about my mother, I'm probably going to respond in kind.
Brian, you also refute the fact that he suggests these issues have gone back as far as the 90s. Is that right?
Well, there was one comment that he makes in his report where he said, or he claimed that in the late 1990s, there were questions and that portfolio managers would just index the stock just in case they really thought there were problems. That's a bunch of garbage. St. Jack Welch was still the CEO. Nobody would criticize the company in print because, you know, it was thought that they would, you know, I'm joking, you know, kill your family members or something. No, this stock had a halo around it. Even when Jeff Immelt took over as CEO for probably the first 3, 4, or 5 years. So no, it wasn't until about 2006, 2007 that people in mass really started to question the company.
This is a company that has certainly been through several pretty rough years. It's in the midst of a turnaround right now. That long-term care insurance business is certainly in focus. In your assessment of the company and of the stock, do you expect that it's going to have to take greater reserves for that LTC business?
Right. Well, Mr. Markopoulos makes a case for further reserving. I wouldn't discount that possibility at all. I mean, when you think about, you know, the aging of the book, some things he does point out, and the fact that interest rates have remained very low, that's hurt any company that underwrote thinking they were going to earn higher returns than they are. But that won't be GE specific. That will be for any insurer which has written these 30, 40, 50-year liabilities.
Is that priced into the stock? Do you think that possibility is priced into the stock here?
a lot of it is exactly how much we don't know. I mean, that stock was in the low to mid 20s when LTC first blew up in the public market, and look where it is now. And that got the shares down to really about where we are now. So Keith, if I'd have to say yes.
Keith, what's your take on all of this? And also, how much of this sort of wild card possible risk on GE was already priced in? Because there's been a lot of skeptical analysis of the company for the last couple of years.
Yeah, there really has. And if you watch the slow bleed, as we're talking about here, moving down from 30 into 20, and I made the statement, I may have been on this air here at $20, I wouldn't touch it when it was really selling off because I thought it was dead money, and that turned out to be somewhat prescient as we come all the way down. But it's really about people not understanding all the various businesses and the components and how they fit together, and knowing that there are problems not only in the LTC business, but also in the broader industrial business. And you're seeing that reflected. I mean, listen, I can't tell you that I know a lot of people that actually want to touch the stock even at these levels.
Brian, just to wrap all of this up here, in terms of the accounting, which is certainly under scrutiny on the heels of that report yesterday, we do know that regulators have investigating some of the company's practices around how it's accounted for certain businesses. What is your expectation for that, and how do you think this report fits into that bigger discussion?
Great questions. By the way, I'll take a little bit of issue with some aspects on the industrial portfolio. With respect to the accounting, clearly there was aggressive accounting. It's why we're going now to probably our third CFO in about the last 3 years, right? However, regulators can and do take a holistic approach, and when they come in and they're already there, they're looking at, is this the same management team now? And you have a different CEO than you did a year ago. And this is not a lifer. This is somebody who's come in from the outside. I would flip a quarter with Larry Culp over the phone and trust him, okay? I've known him since 1997. This is a different leader. It's a different situation. You have a new CFO that will be coming in. Regulators will look at that very differently than it's the same group and they've taken another charge. On the industrial side, look, there are challenges. We know power has to be fixed. It's going to take a lot of fixing. You've got bad business they wrote. But having spent some time, traveling globally, there's good underlying demand for power projects. On the aerospace side, clearly with the 737 schedule being adjusted, that's having an impact on the aerospace supply chain, but the underlying fundamentals for aerospace are still fairly sound. And healthcare is healthcare. So I wouldn't say that the industrial portfolio is, broadly speaking, a debacle. However, the huge one that has to be dealt with is power.
Brian Langenberg, thank you for joining us today.
It's a pleasure.
We've got Apple, coming up. Apple, one analyst says don't look now, but wearables are moving the needle. We're going to look at what that means for business in that.
Plus a live interview with Goldman's co-head of investment banking, what he's seeing in the market, M&A and IPOs for the remainder of the year. Closing bell back in a couple of minutes.
Welcome back to the closing bell. It is time now to get word on the streets. UBS putting out a note on Apple saying wearables are actually moving the needle. The firm saying that segment has contributed more year-over-year growth than services for the first time ever. UBS reiterating a buy rating and a $235 price target on Apple stock, which is up more than 2% today, around 206.29 a share.
Loop Capital upgrading TJX companies to buy with a $60 price target. The firm saying the retailer is a good defensive play, citing market share gains, improved brand availability, and healthy traffic trends, among other factors. And Leerink initiating Merck with an overweight rating and a $103 price target. The firm highlighting sales and readouts of the company's cancer drug Keytruda as primary drivers of Merck's share price. Leerink also says investors are underappreciating the company's potential for long-term diverse revenue. The Apple one really stands out for me. Really interesting analysis of wearables. They have done a survey across 4 geographies. They say only 7% of iPhone users own AirPods already. Incredibly low number. 12% if it's an iPhone X, down to 3% if it's an older model like an iPhone 6. And again, just highlighting as people upgrade, the chances that they will start to buy AirPods for the watch. They say only 12% of iPhone users. So clearly the potential there for more people to buy wearables, but I guess for the next couple of quarters, the share price is still going to react more to the
iPhone sales. Yeah, for sure. Listen, they've been trying to transform their business model into these other revenue streams for a while. And also, don't forget they have the PowerBeats portfolio. So they just came out with PowerBeats Pro, which is by all indications an awesome pair of earbuds that people can use. But I think also, wearables is it, but the real trick is once they get market share, they're going to have to figure out how to make them planned obsolescence like they did with the phone.
So incredible that with all the trade and tariff angst that's been playing out, Apple stock is down 3% month to date, and by almost all of their metrics, it's actually higher.
You would be foolish to have bet against Apple the last 20 years, and I think that still plays out. They will figure out a way to diversify their revenue streams. Wearables seems to be it, and then services, and then they'll come up with the next great phone.
Still to come here on the closing bell, we've got your last chance trade. Plus, it's been a week of sharp swings coming up while some of the most volatile parts of the market are flashing warning signs for the economy. A bearish and bullish take on the outlook from here. Welcome back to the closing bell. Look at that sea of green.
Yeah.
Has not been the norm this week, but it's great to see as we close out a volatile week. We're up 1.3% on the S&P 500 today, up 255 on the Dow. So we're off the highs of the session, but still looking pretty good for the week as a whole. We're still down about 1% on the S&P.
Yeah, really wrapping up what was a very volatile week. Let's take a look at what's driving the action today. Bullish stimulus signals from China and Germany, two countries where weak data sparked a global sell-off this week. Yields bouncing off their lows, that is giving bank stocks a lift, and renewed hope for trade deal progress, as President Trump says he is scheduled to call with President Xi.
Time for a CNBC News Update with Sue Herrera. Hey, Sue.
Hello, Will. Hello, everyone. Here's what's happening at this hour. Secretary of State Mike Pompeo and other administration officials are set to brief President Trump on the state of peace negotiations in Afghanistan this afternoon. Trump is spending most of the week at his golf club in New Jersey. He has long been skeptical of the need to continue a U.S. military presence in the embattled country. Pennsylvania Governor Tom Wolf signing an executive order to combat gun violence. It creates a special counsel and a division of violence prevention, among other initiatives, and it comes 2 days after a gunman shot 6 Philadelphia police officers. Jerry Kelly, the woman accused of holding 4 students at gunpoint when they knocked on her door selling discount cards for the high school football team, appearing in a courtroom for the first time on Thursday. She is the wife of the county jail administrator. She has pleaded not guilty to all charges against her. And Tyson Foods is recalling more than 39,000 pounds of Weaver-branded frozen chicken breast patties. They may be contaminated with extraneous materials. The product was shipped to retail locations nationwide. It has a use-by date of January 31st, 2020. You are up to date. That's the news update this hour. Morgan, I'll send it back to you. See you next hour.
See you next hour, Sue. Thank you. We're going to send it over to Dom Chu now at the Telestrator, looking at some of the most volatile parts of the market this week. Dom.
All right, so Morgan, they have to do with commentary about not just the U.S. economy and the rate picture, but the global economy as well. So as we talk about the S&P 500, you can see here over the course of the 1 week span, we're still down about a little over 1% at this stage, despite the 1% gain that we've seen. And we've seen that nice rocky move that we highlighted earlier in the hour. With regard to the specific parts of the market that have seen some of the most volatility, we're going to take a look. First of all, you mentioned those financials as being one of the driving forces behind trading over the course of this past week. If you take a look at financials overall, that financial sector spider, a big bounce today by 1.7%. Over the last week, though, still down over 2%. This particular ETF, one of those points of interest for many investors as they watch about the interest rate picture and what the yield curve inversion really means for the banks specifically. And one other place I would point out that's not getting as much attention today, given the massive run-up everywhere else in the market, is the oil market itself. We are seeing gains, by the way, in WTI crude and Brent. However, the energy stocks are not participating as much in the overall picture. And one of the reasons why we're seeing that play out today, remember, this sector is at about 3.5% so far right now. One of the places that we're seeing that play out a little bit more is in these energy stocks. And one reason why is because OPEC has now taken down their forecast for global oil demand over the course of the rest of the year. So it's not just oversupply in the market, guys, right now. Morgan Wolford, it's also a question of demand, and oil stocks not participating as much in today's rally. Back over to you guys.
Keith, with that summary, I mean, even though industrials, financials, tech are leading today's bounce, it doesn't change the lay of the land for the week as a whole, which has been defensive in terms of the sectors that have done the best.
Yeah, without question. That's right. So with any money flowing into the market, you've seen those defensive plays. The XLF, I'm glad Don put that up on the board because the XLF was the most oversold ETF in our quantitative work, vastly oversold. And that's first an interest rate play, second a growth play, third a tariff play. And the tariff play comes into the smaller cap and mid cap financials, who are mostly do their business here in the U.S. If companies are not doing well here in the U.S., they won't be borrowing more from banks. So that's why you're seeing that. So it's right to see a bounce in that today.
And is that why you're seeing a bounce in the small caps as well? Is that why that's important to see that?
Yeah, without question. I mean, the largest constituent group in the small caps are financials and non-bank financials, about 23%. So if we think that the growth is still going to be there, we're not going into recession, that's why you'll see that bounce. It's got to lead us out of here, though, to keep this bullish trend.
Okay, one to watch. U.S. home building falling for the third straight month in July. Up next, we're going to dive into the latest housing data and get comments from the CEO of KB Home about the state of the industry.
Plus, we'll preview the Fed's Jackson Hole Summit with former Fed Governor Sarah Bloom Raskin. And as we have to break, here are the leaders and the laggards in the S&P 500 this week. Closing bell back in just a couple minutes. Don't go anywhere. Welcome back. U.S. home building falling for the third straight month in July. Let's get to CNBC's Diana Olick for more. Hey, Diana.
Hey, Will. Yeah, the headline housing starts number was weaker than expected, but it was all because of a big drop in multifamily, which is always volatile month to month. Now, single family saw a gain, up 1% for the month and up 2% annually. Single family starts in the first half of this year were down 6% compared with the first half of last year, so any gains right now are good, especially given how low the supply of all homes for sale is right now. Single family building permits were up a little month to month, but down nearly 4% from a year ago, so not exactly awesome, especially given this drop in mortgage rates. Usually starts rise as rates fall, but that has not been the case lately. The two fell together for much of this year, only diverging in the last few months. Now, in a recent interview, KB Home CEO Jeff Metzger said, "I've always maintained over the years that consumer confidence means more than rates to the home buying decision." Now, consumer confidence in home buying hit a record high in July on a Fannie Mae survey, but the consumer confidence numbers out today from the University of Michigan are much weaker, with more people saying now is a good time to sell, not so much to buy. Back to you guys.
Diana, when you do look across housing right now and the trends in home building as well, are you finding that there's differences depending on the price points in the homes?
Absolutely. It's all about price right now. I mean, there's so much demand on the low end of the market and so little supply. So that's where prices are rising fastest. We need more supply on the low end. Builders continue to say they want to, but they can't afford to because of the higher costs for construction today.
Keith, how are the home builders looking in your eyes?
You know, I'm not sure that I would be going into them in a great way right now. Longer term, I do think the trends are good for them because we are starting to have a lot of household formation. But as Diana's pointing out, it's at the lower end of where the market is. So if they can somehow right-size their costs and build there, then they'll do quite well. Short of that, they're going to struggle a little bit, I think, for the next few months.
Diana, thank you. We've got a market flash. It's on Palo Alto Networks. Rahel Solomon's got the details for us. Hey, Rahel.
Hi, Wolf. Yeah, so the information is now reporting that the company's executive vice president of worldwide sales is stepping down. So the cybersecurity firm really getting hit hard just within the last hour on the heels of this news. Right now, down nearly 8%. You can see now closer to 7.7%, making it its worst day in at least 2 years. So Dave Paranich, that's his name. He's leaving after 3 years, again, according to the information and according to people familiar with the matter. I should mention that CNBC has reached out to the company. We haven't heard back just yet. Of course, we'll let you know if that changes. Now, in recent years, the company has seen quite a decent amount of turnover. They've changed CEOs. They also have a new president. The company, according to the information, saying that Paranich will stay on until September. They are looking for a replacement. But again, the cybersecurity firm right now down 7.6% on this news that Palo Alto Networks executive vice president of worldwide sales, Dave Paranich, is stepping down. Will, I'll send it back to you.
Rahel, thank you. We've got 18 minutes left to trade here on the closing bell. We're up 289 points on the Dow. The high of the session was 334, but healthy rebound to what has been a negative and volatile week. The Russell leads the chart today. Of course, it's been a laggard, but it's up 2.2% today. Up next, we've got your last chance trade with Keith Bliss.
And later, Goldman's co-head of investment banking is going to give us his outlook for the rest of the year. He'll weigh in on deals, IPOs, and much more. That's coming up. And the utilities ETF, the XLU, hitting a record high in today's trade. Here's a check on where it stands as we head to break. We'll be right back.
today.
Welcome back to the closing bell. 40 minutes left of trade. We're up 1.4% on the S&P, still down 1% week to date, but all sectors higher today, led with some cyclicality there. Industrials, technology, and financials top. Utilities, real estate, and staples, the three best performers of the week as a whole, are bottom today, albeit still high.
We've got 14 minutes left to go. Let's get a check on some individual market movers. Retailer Dillard's falling after reporting a larger than expected loss for the quarter. The company also reported revenue below forecasts and saw same-store sales fall 1%. That stock's currently down at 3.5%. And shares of NVIDIA are higher on the heels of its earnings and revenue beat after the bell yesterday. The company's saying results were helped by demand for newer high-end graphic chips designed for video games. As you can see, that stock is surging 7.5%. Keith, what do you think? What do you think of the semis overall, especially with Applied Materials and NVIDIA both reporting better than expected numbers yesterday?
Well, they're reporting better than expected numbers, and that might be a good play. If you are like me and you believe that there will be a trade deal worked out with China, I think then all that pressure that they've been having, you'll see them rally pretty hard. And I am a believer a trade deal will get done with China well in advance of the 2020 election.
Why? Because the U.S. will soften its position, or will it be comprehensive?
I think it'd be comprehensive across the board, and that's the deal that President Trump has said that he needs, and I think they'll work towards that. And again, I'm a big believer that politicians understand where they are in the calendar, and if this economy is to keep moving, then the tariff situation needs to get ironed out, and they'll get it ironed out.
There we go. We've got just 13 minutes left, so Keith, let's go for your last chance trade. What have you gone for?
I got a really simple one today, playing the oversold and overbought situation that we have here in the market. So at the same time, stocks got oversold, bonds got overbought. So a good bond proxy is the TLT. I think I'd be in here selling it right now, as we think that's going to come in, and we go neutral on the S&P 500 at 2950. So you can certainly buy any one of the ETFs like the Spider that act as a proxy for that, and ride that for a few more sessions, I believe.
That said, you were saying you were expecting some dovish commentary out of Jackson Hole next week. So you're still happy with the TLT trade ahead of that?
Yeah, absolutely. Because, again, because bonds got oversold, you're right. It could have pressure on rates and people make more into bonds. But I think it's more the case where people got into bonds for a fear trade, and they'll find out that the world is not collapsing. They'll start to unwind that trade a little bit, move more in the stocks, and rates will help the stocks. So if you were to put those two together, I think that's a really good trade.
The talk of the German fiscal stimulus today, which was literally just a brief mention, but clearly had a big response in the German 10-year yield, and that affect markets here. How much could we see bonds move if we do start to see a fiscal expansion in Europe and inflation and the economy start to turn around a little bit?
Well, that's the key point right there. We've not, as much as they've tried, they've almost been pushing on a string to try and get inflation into this market. When you look at traditional 10 years around 4%, we just can't even get above 3%. We hit a wall. So I think it's still going to take a lot. The dynamics of the global economy are much different than what we faced with 20 years ago. There's so many moving pieces in there. But if we can get some inflation, then you will see bond prices really start to come in substantially, and you'll see rates move up.
I want to get an update from you on your stance on two previous picks for last chance trades, Teladoc and Canopy Growth. Back on July 8th, you pinpointed both of those.
Yeah, well, listen, I think Canopy Growth has kind of struggled a little bit and moved sideways, but I'm still a believer in the fundamental story underneath cannabis. Listen, I can't predict the future, but you just see the trends going on and how it may overplay. I think this will be a case where the states start to run the federal government down a path a little bit. A lot of things have to change, but Canopy Growth, the play there is that we do get cannabis legalization off the Schedule 1 here on the federal level. Teladoc, again, I think has a good sound business for what they're doing, how they're disruptive technology to help people. And if you look at the trends underneath healthcare and how we will consume healthcare going forward, I still think that's a good longer-term play.
Yeah, and they're both rallying in today's trade, that's for sure. All right, well, we have got 10 minutes left to go, and up next, we're covering all of the angles of the market in our closing countdown.
And after the bell, we'll discuss how President Trump's handling trade with China when we speak with Andy Puzder, the former CEO of CKE Restaurants. He'll weigh in on the president's performance and the market reaction. That's still to come here on Closing Bell. have just under 7 minutes left to trade. Nice little jump in the last 15, 20 minutes, up 320 now. We're close to session highs on the Dow, which was 334. The S&P is now up 1.5%. Its week-to-date declines now less than 1%. The same applies to the Nasdaq, whereas the Russell and the Dow remain down about 1.5% for the week as a whole. Up 325 on the session on the Dow today. Time for the closing countdown. Sean Cruz here to trade the close with us. Dom Chu is monitoring the charts. Rick Santelli has the bond report. Bertha Coombs is at the Nasdaq. Dom Chu is also covering the biggest movements. He's in two places at once, so remarkable, Dom Chu. We will get to him twice in just a moment, but first let's trade the close with Sean Cruz, who is a trade strategist at TD Ameritrade. Sean, good to see you. So yesterday we talked about the VIX. It's fallen quite a lot today. Are you surprised?
I was a little surprised to see a pullback, this far closer to 18. I mean, we're off of the lows we saw for the day, but I was expecting a little bit more concrete news to come out before we were really going to see a meaningful pullback. I also was expecting bond yields to rise a little further than they have before we see the VIX this close to 18. So I was expecting it to maybe get down to 20, maybe a little below that, because we've had such a broad-based rally. But I was a little surprised to see VIX pull back as much as it has. But I'm still waiting for yields to rise a little bit to maybe be that second force that pushes us even higher in equities.
Yeah, to that point, I mean, you look at what's leading the S&P higher today. It's industrials, it's financials, it's tech stocks. But if you look at the week as a whole, especially given the fact that we did have all of this volatility, it is some of those more defensive sectors like utilities, like real estate, like staples that are higher on the week. Does that sound like a trend that's going to carry through into next week?
I think next week's going to be very interesting in that we are going to hear from the Fed. And I don't know if you want to move into staples, necessarily to try and get a lot of anything defensive, really, to get that big upside move. But I would look at it as one to maintain equity exposure, but be able to ride out volatility without getting as much, I'd say, of this back and forth wash that you've gotten if you were in something like financials or tech. So you can look into staples as one area to get an opportunity. If you look at names like Procter & Gamble or Conagra, they actually had relatively decent weeks despite all of this volatility that we've seen. So look at names like that as maybe somewhere to be in equities and not be as exposed to some of the more volatile sectors.
Keith, to some of Sean's points on the VIX, how have you seen that play out this week? And given we're in August, could it have gone higher still?
No, I don't think so. So our work on August 1st actually had the VIX overbought. So if you're paying attention, that led the S&P to becoming oversold. We actually see the VIX going neutral around 1725, 1730. So we think it has a little bit more room to come in. And I think you're going to see rotation into growth names next week, especially if Jackson Hole is dovish.
Sean, we just hit fresh session highs. We got 4 minutes left of trading. The Dow's up 348 points right now. How does this bode going into the weekend?
I think this is something that you wanted to see going into the weekend, and it kind of points to a lot of the selling, it looked like, just got completely overdone, and a lot of those sellers are now out of the market. They're either have been completely exhausted, or given some of the data we've heard overnight, we've got some maybe a little bit of a hint at more accommodative policy going out of Germany that could maybe be something to prop up some of the EU issues that we've seen this week. I think that really pushed some sellers to the sideline and maybe even caused a little bit of covering. So I think right now there's just no sellers in this market.
Sean Cruz, thank you. Well, let's send it over to Dom Chu at the Telestrader. Dom.
All right, so Morgan, what we've got right now is a look at some of the volume pictures right now from the New York Stock Exchange. If you take a look at the overall picture for advancers and decliners, as it stands at the New York Stock Exchange right now, a very healthy move here, almost 4-to-1 ratio. Advancers 2,355, 620 in terms of declines, and just 86 unchanged right now in this overall trade. As for the volume pictures for advancers, decliners, and those unchanged, if you take a look at that picture, it is a movement here a little bit more on that side as well. Take a look at this because advancing volume right now, about 2.5 billion shares, declining volume just around 370 million, just shy of that. So as we watch the NYSE picture play out, the advancers certainly in control, the bulls in control today from the stock side of things. Now let's send things out to Chicago and Rick Santelli for a look at the bond pits. Over to you, Rick.
Thanks, Dom. A 1 week of temps. Just checking out. What a wild week. It seems to be holding. It's up 1 on the day, but it's down 21 basis points on the week. 20-year chart of 30-year bonds. I defy you to
find. Wow, look at that dump into the close. Saw that coming.
Not only 20 years, but going back all 42s. Today's the birthday of 30-year bond futures. Finally, a 1 week of boons And this is the 2-year. The shots went from minus 86 last week to minus 91. Another record.
I got a minute. Hey, what am I doing?
Hugs the highs going into the weekend of the NASDAQ.
Yeah, we're certainly hugging the highs. Not for the week for the NASDAQ, but chips and hardware, the real stellars today. NVIDIA with a strong earnings report. Applied Material a little bit muted on the guidance, so that's still a little bit of a laggard. Nonetheless, chips will end the week out of correction. Hardware strong because of Apple. Apple's the only one of the mega caps that is up for the week in a pretty nice gain. Meantime, you have the really popular IPOs, the most part down for the week. Beyond Meat down for the third straight week now, off about nearly 40% from its all-time high. Adaptive Biosciences and a lot of the healthcare names that have reported have bucked that trend.
I close a couple of these trades out.
All right, so Bertha, what we got right now is a move here higher the market towards the session highs right now. The theme that's been playing out so far in trading today here at the NYSE and certainly elsewhere in the market is this idea that we're seeing a reversal in some of the
that is it for the bell, and I am actually getting ready to head out the door. It's upstairs a little too long. I got a chance to close out a couple of little trades. I had a couple of them I'm swing anyway, but you know, again, you got to be careful of the threshold swinging because they will close them out for you. So I think I'm solid and 2 of 3 of them. I got a chance to hit a couple of them real fast. All right, guys. So I'm going to close out here. Again, I do appreciate you guys stopping by. I know it's a busy Friday. You guys, got things going on in life too. In retrospect to, coming on late myself, and not necessarily giving a full day worth of, commentary and or screen sharing, however the case. But being able to be with you guys, even just for 5 minutes, means a lot, and I don't take it for granted. Yeah, because I do realize that, at some point I would like to build, build this opportunity up for a lot of us, meaning a place where you can come, our own little so-called trading marketplace where we can meet, hang out, just like the Discord rooms or Twitter, wherever you hang out, got in the Facebook investment groups you may be in, but definitely from a visual standpoint, having the ability to kind of have like a real-time, corporate meeting of the traders in real time and get after some, after some of these trades and get to a bag. I think that, that's like totally awesome to me to be in that position to do that at some point. So we can start doing trades in real time, calling out trades, having people get in the trades if they, the whole 9, so we can find ourselves making a little money. So that kind of stuff, I get excited about it. So, but that's it. So again, peace, power, profit to everybody. Thank you for stopping by, hanging out with your brother. Even though it was an impromptu session, even though it was that. We got a little bit of commentary in, some good little, data points to share and to think about over the weekend. Again, strategize, methodically, leave no stone unturned. Take your time through the information. Take your time. Keep one ear to the street, like I always say, one eye on it. Definitely when it comes to Trump, to tell him what he's going to do to shake up the market this weekend. So look forward to that. Find those little hidden gems, trades or stocks out there that may be in play for Monday. Again, you see what kind of movement we got today in the market with the SPY jumping up well over, over 1%, 2%, near 2% almost. I think I go look at the chart, whatever. But big day in the market again, regardless of it being, a pump and dump day. When Wall Street wants what it wants, it's going to get what it wants. Meaning it looks for any reason to kind of be bullish, on the market. And again, you can't compete with bank money. Yeah, I know that sounds very, kind of tough, but that's just the reality of things. You can't compete with bank money and hedge fund money. They have a way of manipulating stocks more than you can even imagine. And they do it very, with a straight face. They can care less because they only care about their pocket, their bottom line. So again, when you hear people say silly stuff like, the Chinese are manipulating their currency and all this, that, and the third, you just stop for a moment to look at it and start laughing because they have no clue on how manipulated the U.S. markets are, and they would hate to even have that thought in their mind because they have no clue how this stuff works. But this is one of the most manipulated markets on the planet, and it's the most lucrative one too. Granted, but we're not naive to that, and nor will we ever be naive to that fact. So we'll know how to play it moment over moment. So again, that's why I say, we rent and we lease. We don't own. You know, you may lease a stock for a long time, 2, 3, 4, 5 years, maybe even longer, but we still don't own, we rent and lease because here today, going tomorrow. And I don't trust these people with my money no more. And I can, you know, put it in and get it right back out of there. And so that's just how I look at things. That's just me. But, you know, again, all of them probably knows to me. But that's that. All right. Moving on. Get off the soapbox, bro. All right. But other than that, guys, I appreciate you guys stopping by again. Peace, power, profit. Have a great, an awesome weekend. Study wherever you can. You know, you have free time. Keep some books in front of your face, a PDF or a YouTube, excerpt or snippet or something that's going to keep your mind strategizing and going over things that you might have missed the previous week before. You know, this is a steel sharp as steel reality, right? Even though if you're not getting it from another trader, you can hear it, or comprehend it through reading a PDF book or hearing a YouTube, session. And these things out there, again, just at our fingertips, free disposal. Information is free if you know how to access it properly, right? And so that's very, worth the opportunity to submit your time to get better at this by hearing some kind of, vantage point, piece of information or data that can help you out, right? So have a blast. Don't go too overboard. Don't spend all your money on something that's trivial. Save a little bit for the market for Monday. I guarantee it's going to be a wild one. I have no doubt because, the way the market ended out today has a lot to do with how it's going to probably open up Monday. And there's so many things that could happen between now and Monday on the world front. And so we know there's a lot of things out there that's smoldering that could erupt at any moment beyond Hong Kong and everything else out there, the tariffs and so forth on. And there's just a lot of stuff that's just bringing, a lot of volatility to the marketplace. So when there's volatility, there's money being made. Just always remember that anytime there's volatility, there's money being made. And, as a day trader or a swing trader, you live for volatility. You need volatility. That's how you make money. You need things to move, even sometimes bigger than the ATR, the average true range, the average trading range in a day. If it's 60 cents normally, well, it's good that it can move $1 plus in a day. That means there's a lot of liquid opportunity within that dollar stretch of movement that you can capitalize on if you're trading it up or down, right? And that's how we make our money, right? So again, peace, power, profit to the family. We here for the long haul. We're gonna get this thing. Yes, brother Khalil, I do. WeTradeHQ.com. I do a mentor session over there with the family with Jake and Brad. Again, I'm in the process of getting that foundated again. I just moved recently, and we kind of put it a little bit on ice, not a lot, but some of the people that were already in, they just have access to me personally through my email and just calling whatever, and they still get what they can get from it. But again, I'm finna ramp it up real, to the next level, hopefully here. I wanted to say it this month, but again, I got a lot of things going on since I moved, and I'm trying to iron out still. But you definitely can partake in it. You have undeniable access to me. Again, call whatever. I have data, reference pages, reference books, reference material, reference lessons that I've gone over and discussed. You have, again, that's the part, the importance of a mentorship where you have a person's attention. It's not like you just come in for class and you miss that day of class, you got to figure it out on your own. That's not what this is all about. You want people to be successful at this. So, by me sacrificing my time to do that, it's quid pro quo. You sacrifice, I sacrifice, we meet together, we go over information, we help each other, preferably get to a place where we can learn how to do this thing at a very proficient level. And that's the part of this I get excited about. That's what makes me humble about this. But yeah, definitely check me out at WeTradeHQ.com. If you want to be a part of the, that portion of it, you guys can always find me on my Facebook page, my Facebook business page at AfurakanEmporium.com verbatim. Nothing, abnormal with that. Again, just a great opportunity, to really, really share, some good knowledge with you guys. And help you, unpack this stuff, make it make sense, so to speak, as people be saying, make it make sense. That's what I'm all about, dumbing it down, making it make sense to the average person, because I believe every person can do this. Every person has the ability to do this, but they have to own it. They have to own the opportunity, and that's what matters more than all. You have to sacrifice and have a made up mind that you want to learn it. So you have that little free time, you're not necessarily, busy. again, crack open the PDF, crack open an audio file, listen to some some knowledge surrounding the market that may help you become better. All right. So that's it, guys. Peace, power, property, guys. Again, like I said, I look forward to being on. Hope that Sunday. I'm trying to do a broadcast Sunday. That's my goal. I'm pushing for it. Right. Write it down. Put it on your little calendar. Emporium gonna try to do a broadcast Sunday. Hopefully before the futures market open up at 6 p.m. So hopefully around about 5 p.m. like I typically always try to do. 5 p.m. Try to have a session, maybe a study session too. That's what I'm hoping for. And then we'll go right into the futures market, see how the market's gonna open up, and see how we can start strategizing for Monday's full retail market opening. And so that kind of stuff gets me excited. That's why it's like when the weekends come, it's like, man, it's the weekend. I can't trade equity markets, but you still can trade crypto and other things too. That's one thing I love about this. There's other opportunities and asset classes out there worth the opportunity too. But beyond that, weekends are always the most miserable time for a lot of traders because they're like, man, I want to go trade and make some money, right? And so now you got to sit. You got to go find something constructive to do the entire weekend that kind of kill your time to make it get through the weekend. And most people that actually work jobs and things of that nature, they can't wait for the weekend because they want to be off, away from their boss, their boss and co-workers and things of that nature. Right. So it's kind of the opposite for us. We're like, man, the weekend here is like, oh man, right? I gotta find some new to burn time so we can get back to Monday. All right. And that's the strength of an investor trader. We live for the opportunity. Right. All right, guys. So that's it. So Ubuntu, I am because we are. Just want to leave that with you guys. Again, do have a safe and awesome weekend. And I'll meet back up with you guys hopefully this Sunday for a session, right? For a study session and possibly even again a futures kind of strategized session too when the market opens up at 6 p.m. on Sunday. All right. That's it, guys. So I'll talk to you guys then. Thank you guys for stopping by. It's your brother African Emporium.